guys, welcome back with me. Don't forget to like, share, comment, and subscribe. Berlin router. Germany's municipal utilities expect up to 15% of their clients to default on payment because of high gas prices. The head of local utilities organization VQ told Frontier Media Group about 900 such companies called state work distribute two-thirds of all gas and also provide power, water, heat, waste disposal, and broadband. The companies have been purchasing gas at very high prices, which they expect to pass on to consumers through planet gas levels from October. There are municipal utilities that calculate default of up to 15%. FICA managing director in Berlin told FICA in an interview, Libing called for a moratorium on insolvency application for energy supplier, adding that relief for these utilities was still needed in the autumn, proposing a cut on value-added tax on gas and electricity, a proposal by Germany's ruling Social Democrats seek to protect from insolvency municipal utilities that are pushed to pay higher prices for gas, a document signed by Reuters saw it on Sunday. Oil prices rose on Wednesday after ceding 5% in the prior session, a sake of strength in U.S. gasoline demand helped is concerned over an iron-lead supply glut and a risk in crude inventories. Crude price jumped on Thursday after reports said Washington and Tehran has reached an agreement to revive the nuclear deal. The move is expected to lift sanctions on Iran and see the release of over 1 million barrels per day of supply into the market. Also pressuring price was data from the American Petroleum Institute, which showed that U.S. crude inventories unexpectedly rose by 593 barrels last week. Official data from the U.S. Energy Information Administration, due later today, is expected to show a 1.5 million barrel fall in inventories. London Trent Brent oil futures were fed around $98 a barrel by 2023 at while U.S. West Texas Intermediate futures rose 0.5% to $92.70 a barrel. The AP data, which usually heralds a similar reading from the EIA, also showed that gasoline stocks fell by 3.4 million barrels last week. The reading indicated that consumer demand for gas has persevered despite rising inflation and interest rates in the country. Wholesale U.S. gasoline prices also fell to their lowest level since before the Russia-Ukraine conflict, pointed to more relief for U.S. consumers. This also comes amid a continuous drawdown of the U.S. strategic petroleum reserve by the White House in an attempt to stabilize local gas prices. The CPR, which is an emergency stockpile maintained by the U.S. Department of Energy, is currently at a near 38-year low, but slowing economic growth and rising inflation across most of the globe has driven concerns of sluggish crude demand outside the United States, particularly in major Asian importers. China, the biggest importer of crude, has seen a drastic slowdown in economic growth this year, which has dampened crude import in the country. Crude prices are set for their third straight month of declines. There was rising streak in over 2 years. Okay, that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.